we almost have to consider this as a sugar high. We are on a sugar high, and the Fed just gave us another pixie stick. It's kind of concerning if you ask me. I've got 2 young boys of my own, and anytime they ask for sugar, I know that there's going to be this high activity period of time, and then the crash comes. And my fear is, when does the crash come, and how bad of a crash?
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, so we got our 50-point basis cut. Most of the so-called experts were expecting 25 basis points. So far, the markets are reacting favorably. You wonder if they're reacting to the election or to the Fed or to both. But we got a guest here who's going to explain it all to you. And, well, hey, what can you say? Dale Smothers is with us now, president, founder of RDS Wealth. Dale, it's great to have you on the show, your first-time guest. So,
yes, sir.
A, how bad is the economy? B, does 50 basis points make any difference? And C, does the election matter at this point?
Sure. So let's take it in order then. Let's go A, how bad is the economy? Cutting straight to the chase, I think a 50 basis point cut at this point in the game is a telltale sign that they see something that's not in the publicly disclosed numbers. When you look at the jobless claims that just came out this morning, and you see that our jobless claims aren't actually as bad as what you would expect after a 50 basis points cut, you got to wonder, what in the world are they seeing? Not to say that they're wrong. It's just, what are they seeing that would negate this type of jobless claim that we're seeing? I mean, the jobless claim is trending in the right direction, and we still come out with a 50 basis point cut. For B, on the 50 basis point cut, does it really affect the market? I think that the market's going to react favorably to this, as you already see happening today. My problem that I have with this is that we almost have to consider this as a sugar high. We are on a sugar high, and the Fed just gave us another pixie stick. It's kind of concerning if you ask me. I've got 2 young boys of my own, and anytime they ask for sugar, I know that there's going to be this high activity period of time, and then the crash comes. And my fear is, when does the crash come, and how bad of a crash is it? And then for C, does the election matter? I think the election certainly has consequences, as every election does. We've got the potential for a long-term capital gain or short-term capital gain being taxed, even without realizing it. That could impact a ton of investors, and in my opinion, could make a lot of money flow out of the capital markets that we currently see. A lot of policy that is on the table right now is going to impact the market. And we can unpack that as you wish. Or in my opinion, I think, again, either of the sides that are going to be running are going to be giving us more pixie sticks along the way. So we're talking to our clients right now, Kerry, in a notion of, hey, in the next 10 to 15 years, we just got to make sure that we're weathering this storm, no matter what it becomes or how bad it becomes. We've got to have assets in places that perform in good markets and in bad.
Yeah, so we're talking precious metals, we're talking cryptos, we're talking consumer stocks. And
I love that you pitched that. I like the consumer stocks. I like those tried and true method stocks that have been around for a long time and paying very good dividends. I'm a big fan right now of stocks that have been hit pretty big, like, say, a Dollar General, recessionary style stock that, if the markets are bad or there is a recession, it's a really good place to buy some things for a lot of the Americans that are suffering the most. And it was, if I'm not mistaken, I think it's down. I didn't prepare for this part, but I think it's down 60+% from its highs. and there's really no reason for it to be. Dollar General is a good place. If you're in this area of the country, they're popping up everywhere you turn. There seems to be a Dollar General being built. And I think something like that would be a good place. So consumers are definitely consumer sector is a great place to invest. I like precious metals. I've not yet gotten on the bandwagon of buying a bunch of gold, but having gold is a great hedge. We also talk about diversification of types of products that investors invest in. And there are ways to safeguard against downturn markets with some insurance-based products. I also like options on some of these stocks that we believe to be good for long-term trading, perhaps maybe generating some income from covered calls, those types of things that we don't have to be as dependent upon the market movement itself if we're getting the income we desire.
Okay. Any feelings about Bitcoin?
Yeah. So I know that you're a big fan of Bitcoin. I'll be honest, the way we talk to our clients about Bitcoin is I think it's a great place to put some money that you're okay letting dance around. I don't feel yet that we have a lot of adoption of Bitcoin like we need to see. If I'm not mistaken, I caught on the news the other day, it was Donald Trump that was in a bar and bought his first president.
In a crypto bar in New York City.
That's amazing. And that type of momentum is only going to make Bitcoin or cryptocurrency more and more in favor. I'm not yet ready to say that Bitcoin is something we shouldn't pay attention to by any means. I think that we've woken up now that crypto is potentially a currency of the future, but I'm still in the camp of crypto is a asset class, not so much a currency. So if you want to trade crypto to make some money with capital gains, certainly that's somewhere you could put some money. To say it's a hedge against the oncoming storm that I see happening, or the sugar crash, going back to my analogy, I'm just not there yet. And the reason probably, Kerry, is the clients we deal with. We don't want a lot of volatility in their positions if we're taking income throughout their retirement years.
But it is a non-correlated asset. And right now, as we're talking, it's right around 64,000.
Yeah.
And I buy a little bit every week, honestly, auto buy, because average up, average down. And,
exactly.
Yeah,
dollar cost averaging into an asset like that is a perfect way to average out your cost if you are interested in Bitcoin. Yeah. And Kerry, I know you are a fan of it. I watched the show. I know that this is something that you enjoy even discussing. It's just more or less coming from my perspective with retirees. Our goal is to minimize the volatility, and something like Bitcoin, perhaps in the ETF format, fits the bill for that. But directly buying Bitcoin on a coin exchange is not something that we've gotten into at this point.
Yeah, well, you got your 20-something ETFs that all have Bitcoin now.
It's true.
So that makes it a little bit more investable for you, doesn't it?
And it's exactly right. And to my point, that becomes a momentum shifter where now things are beginning to be more in favor of Bitcoin being adopted as an actual currency. And this is all good for those Bitcoin investors.
My guess is, 75,000 has been a resistance point for Bitcoin. If I look at the chart, I think it was 73,000 it hit. I'm not mistaken. Jeez, can't remember now. Oh, man, senior moment here.
You're okay.
Yeah, well, that's for today. So we look at the 1 year because it was just recently, and $71,491. That was the peak. And hey, looking at it now, 63,000. It's been trading in a sideways channel with not lower lows, but lower highs for sure. So it's been in a kind of a bull pendant, a bear pendant, I guess. But I got to see it break out at 69,000. That's my breakout point. Then it's going to make new highs. And
that is trading 101. If it hits through that resistance, we are likely to see that $100,000 number that's been prophesied for the last 4 or 5 or even 6 years. I remember Bitcoin coming onto the scene and being able to snatch it up at a very low price, and I passed on it. And, now I'm getting a little bit more inclined to say, okay, this is something that we might want to buy at the next dip. But again, at the moment, not something we're purchasing for clients just yet.
Well, it's pretty easy to purchase. And, hey, I'm up nicely. I mean, Bitcoin over the past year, it's up $36,500. So it was at 27 and change. So that's a nice little return there.
Sir,
you'd have to.
Curious, how do you purchase Bitcoin yourself, or is that something that you go to the exchange directly?
I do it at the exchange, even though honestly it's cheaper to do it in an ETF at this point.
Sure,
but I just kind of like having the wallet there. So,
all right, and I am curious too. To this point, we'll pull up here for just another second. Do you see any divergence from ETF pricing and the actual Bitcoin, the underlying Bitcoin itself?
Not yet. Not major divergences, but I think that's in the offing. And because Sam Bankman-Fried showed you can arbitrage crypto. He's the first one who really made it popular. So, the divergences will not be big enough for individual traders to be able to take advantage of it. You really need a trading bot system to do that. You can't, they're so quick now because there's hundreds of different traders in crypto looking for that little divergence between the ETFs so they can sell one and buy the other, right? Classic arbitrage.
Yeah.
So, but, too much for me. I'm just a hobby trader.
Yeah.
But, if it's making money, then it's a good hobby, right?
Why not? Yeah. So you would be considered more of the long-term. Do you do a lot of trading in and out, or are you long-term investor?
I was swing trading it, but then when I saw it broke certain points and it was heading higher, I just held on for the ride.
Correct.
And hey, but it's at 63,000 today, Dale. It could be at 53,000 tonight.
Yeah. This is true.
And it wouldn't surprise me because now that there's ETFs and there's options and futures, it's so easy to manipulate. And there's no law against manipulating cryptocurrency. So everybody loves it, right?
Right.
So just like
part of the appeal.
It's just like you can't be charged for manipulating commodities. You can't be charged for manipulating cryptos, but you can be charged for manipulating options on stocks, right? Does that make any sense?
The rules we work with, I guess, is the big appeal, in my opinion, is it's the wild, wild west. The idea that there is no real regulation against the Bitcoin market, but the more and more it becomes a asset that's traded, I think we see regulations start to creep in.
Oh, they have to.
Yeah.
And they got to but the other thing is that it's international, transnational. There's no borders. There's no nothing. And the
central banks out of the picture.
The exchanges are really in your imagination. They don't really exist.
Sure.
I mean, they're there. They're just a website. Yeah. So I'm not sure about it. But looking ahead here, when we have this conversation in a year, Dale, what's going to be the economic landscape here? Assuming that political situation is neutral at best.
Sure. Yeah. So I think that any uncertainty for the market is a bad thing. And so, just the fact that we get the election behind us, I think it's going to give us a little bit of a trend in the right direction for the market. Again, my fear is that we are on this sugar high, and that when we start to see the reason why rates are being cut, we could see inflation reemerge. Reemergence of the inflation is going to certainly be a halting factor for the market, especially if the Fed has to react again to inflation. In the hills of Kentucky and the Appalachian Mountain region here in Tennessee, where I serve, we have wildfires from time to time that spark just out of nowhere. Just a little bit of spark ignites a massive wildfire. And one recently just almost burnt down a city that is widely known, Gatlinburg, Tennessee.
Oh, sure.
And in my opinion, I think what we see is inflation was raging fire. And all of a sudden, our firefighters have put it out to, say, 90% completely done.
It's smoldering.
But it's smoldering. You're exactly right. And it's still smoldering. And all of our firefighters are headed home. And now the Fed has decided that they are on the other end of their dual mandate to worry about unemployment. And unemployment doesn't seem to be a major factor right this minute. So I'm curious what's going on in their head. And then we've got a potential strike with the port workers. And if that takes place, that could put a major strain on supply. And ultimately, it's an economics problem from there. I don't care if you're a Keynesian or a Friedman. You have to understand that less supply, more money equals inflation. And if inflation becomes another factor, we could see the market begin to melt down in the face of potentially higher interest rates once again.
All right. We're going to leave it at that. Dale, just tell us how we connect with you, where we find you on the web.
Yes, sir. So again, you can go to our website, rdswealth.com, rdswealth.com, log in there, get in touch with our team. You could call our office, 270-600-PLAN, 270-600-7526. If you'd like to sign up for our newsletter, you can jump to our website again, rdswealth.com, and push subscribe at the top right for our newsletter.
All right. Hey, appreciate you coming on.
Yes, sir.
And if you got a question for Dale or myself, shoot me an email at kl@kerrylutz.com. You'll find the link to Dale's site in the show notes to this interview on financialsurvivalnetwork.com. While you're there, please join the 35,000 other people who have signed up and are subscribers to our newsletter. And Dale, we appreciate you coming. Sugar highs are okay, but then they're followed by crashes in your blood. And then you're like half passed out.
You need a nap.
And then you're thinking, hey, maybe this wasn't worth it. I think that's where we're going to be as well. We'll talk to you again soon, Dale. Thanks so much.
Thank you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.